We said that last time. Everyone was saying that they're going to do 75, and then that's probably going to be the last 75 you're going to see because inflation is coming down, and that turned out to be wrong.
Well, that's not what we said. So let's start there. And the second thing I would say is that, we are seeing inflation expectations. If you look at break-evens or what's baked into bonds, break-evens are down at the 2, the 5, the 10-year level from 12/31 till now. Oil is coming down. We're seeing a consumer that last year was price unconscious is now changing his or her behavior. We're seeing them come into the year with stunning balance sheets, and now the balance sheets are being stretched, right? And the economy, the overall economy, is slowing down. So what you would expect is for inflation to come down. What happened yesterday was really about a relative move versus CPI. If you look at the absolute move of CPI ex food and energy is peaking at about 6%, and it's been peaking for a couple months. That's telling me that things are slowing down. And at the end of the day, what did the Fed tell you? The Fed said we're going to front load this. Well, doing a handful of 75 basis point increases, that's front loading. So in order to front load, the second part, you have to start decelerating. And that's what we think we'll see as we go forward in time. And really, that's what the market thinks as well.
Jim Paulsen, you have been bullish. You expect the S&P to end, what, are you still at 4,700 at the end of the year? Is it predicated on the Fed not going as big after next week's meeting and inflation coming down?
Yeah, it certainly is. I mean, if the Fed wants to go up over 4%, they can probably take it high enough to create a recession and create even more damage. I just don't think so. I think the case is going away. I agree a lot with Chris's comments. I think it's very clear to me that inflation, number one, has peaked, and number two is coming down broadly. That was one report yesterday. There's a whole array of reports that show that inflation has been decelerating from the stuff that Chris mentioned, in addition to like import prices, retail inventory price discounts, and now the Adobe price index for tech pricing. There's just a number of things, commodity prices across the board, not just energy, but also industrials, which just set a new low this month, going back to May of 2021. So to me, it's pretty clear. Here's what keeps me bullish mostly. If you go back and look, Sarah, back to 1940, there has been 6 major inflationary spikes. And I define that as those over 6% year-on-year CPI. Of those 6, there was only one time that the market low in the stock market wasn't in when the inflation high year-on-year was in. And I think we're there. The other time, in 1970, it was just a matter of a few more months. Market went down a little while, and then it went up and recovered all of it within a few months. So on major inflationary peaks, you can't wait for inflation to get all the way back down to where the Fed wants it to get. You have to buy when inflation peaks, and that's exactly where we're at. Of those previous 6 that we've had, 4 of them recessions resulted. Didn't matter. Stock market went up anyway.
That was my next question.
I'm sure there were concerns about yields at that point. I'm sure there were concerns about how much higher inflation could stay high. But the fact of the matter is, once it peaks, the stock market has bottomed. And I think the next move is probably up.